Welcome to our weekly trade analysis, where we provide valuable insights into the market to help you make informed trading decisions. Our analysis is based on a robust supply and demand system incorporating historical data and identifying crucial levels and future trends. Our price estimates are based on the data collected from the IC market platform. Let's begin with gold against the US dollar. During last week's trades, gold dropped below the critical weekly demand zone in the 1935 to 1914 range. However, it recovered and closed the week within the crucial area, indicating that bulls are defending this level. The 1935 to 1914 demand zone has been the focus of our analysis for the past 4 weeks. As we have previously highlighted, gold must remain above this demand zone for gold to rebound. If prices collapse below this level, it will provide an opportunity for bears to extend their control to the 1858 to 1837 range. Now let's examine the 4-hour chart to identify key factors influencing gold's recent movements. In Friday's trades, gold bounced off a key retracement level around the 1905 to 1896 demand zone. This level will be crucial to monitor in the upcoming trading sessions, as it aligns with our analysis on the weekly chart. The 1905 to 1896 demand zone represents a make-or-break scenario for gold against the US dollar. Economic events such as US PMI, FOMC, initial jobless claims, and US non-farm payrolls scheduled for this week could impact the US dollar, influencing gold price movements. Traders and investors should pay close attention to the critical supply and demand zones indicated on the weekly and 4-hour charts, as they will provide insights into gold's next move. Let's now move on to the US dollar index, DXY, in the 1-hour timeframe. The index fell below the 102.480 to 102.375 demand zone at the beginning of last week's trades. However, the index found support at the previous demand zone 102.100 to 101.995 and reached 103.135 before returning to close above 102.480 to 102.375 demand zone in Friday's trades. This week, high-impact economic events such as US PMI, FOMC, initial jobless claims, and U.S. non-farm payrolls could influence the future direction of the U.S. dollar. Last week's price action formed an upward price structure, indicating a potential continuation of the recovery effort. The index will likely test the 102.480 to 102.375 demand zone at the bottom of the price channel early in this week's trades. A successful test could lead to a continuation of the recovery, while a failure could target the 102.100 to 101.995 demand zone. Now let's examine the euro against the US dollar in the 2-hour timeframe. After reaching highs around 1.1003, the euro struggled to maintain upward momentum. The pair bounced off the 1.0847 to 1.0868 demand zone twice as indicated on the chart. However, momentum has faded around the 1.0925 to 1.0946 supply zone, indicating weakness in the trend. If the euro breaks and remains above the current supply zone in this week's trades, it could retest the 1.1003 to 1.1024 zone. On the other hand, if it fails to break the supply zone, it could retest 1.0895 and 1.0868 to 1.0847 demand zone. Traders and investors should closely monitor this week's economic calendar, filled with high-impact events that could impact the dollar and subsequently influence the euro. Moving on to the US dollar, JPY pair in the 1-hour chart. Last week, we focused on the daily chart, with a major critical resistance level identified at 144.832. This week, we focused on the 1-hour chart to analyze the lower timeframe. The US dollar had a 7-consecutive-day winning streak before retreating below the critical level of 144.832 in the daily chart and closing Friday's trades in the red. While the trend on the daily chart remains bullish, it's essential to keep an eye on the lower timeframes, especially the current demand zone at 143.806 to 144.150 in the 1-hour chart. The dollar has been in a strong uptrend since forming a price channel in mid-June and could continue this trend. However, it must remain above the current demand zone to maintain the existing price structure. Critical levels to watch are 143.324, 143.806 to 144.150, 144.586, and 145.068, 145.410. Next, let's analyze the GBP/US dollar pair in the 1-hour chart. The pound-US dollar pair failed to break the 1.2804 to 1.2920 major supply zone for the second consecutive week, as highlighted in last week's analysis on the daily chart. This week, we focus on the 1-hour chart to showcase the trade opportunities provided by the supply and demand tracker. The pound bounced off the 1.2061 to 1.2628 demand zone and rallied against the weakening dollar in Friday's session. However, the rally was capped at the top of the falling price channel around the 1.2701 to 1.2728 supply zone. This area will be a crucial point to watch at the beginning of this week's trades, as it could provide vital clues about the future direction of the pair. A breakout above the 1.2701 to 1.2782 supply zone at the top of the price channel could lead to a retest of 1.2763 and the 1.2802 to 1.2829 supply zone. Conversely, if it fails to hold at the current supply zone, the pair could retreat to the 1.2663 and 1.2628 to 1.2601 demand zone at the bottom of the price channel. Traders and investors should closely monitor this week's economic calendar, filled with high-impact events that could influence the dollar and subsequently impact the pound price movements. Finally, let's examine the Australian dollar against the US dollar in the 1-hour chart to explore short-term trade opportunities. At the start of last week's trades, the Aussie dollar fell below the critical level of 0.6693 on the daily chart, resulting in 2 consecutive weeks of decline. The 1-hour chart illustrates the price drop from the 0.6889 to 0.6873 supply zone on June 16 to the demand zone at 0.6604 in last week's trades. The pullback has reached a major Fibonacci level at 61.8. Traders and investors should pay attention to the current supply zone at 0.6645 to 0.6661 and the demand zone at 0.6588 to 0.6604. A break above the supply zone could increase the chances of a retest of 0.6702 to 0.6718 zone. However, if the pair fails to break the supply zone, it could return to the 0.6604 to 0.6588 demand zone. Our analysis provides valuable insights into current market trends and crucial levels to watch. By employing our supply and demand system, traders and investors can make informed decisions and navigate the market effectively. Whether you engage in day trading, swing trading, or long-term investing, our system can guide you in planning your trades and maximizing your chances of success. For more information and access to our supply and demand system, please check the comment section for the link. Subscribe to our channel and stay up to date with market trend and major levels.